The Chinese government has announced it's targeting GDP growth of 5% this year. That's after months of speculation about China's falling economy and continued stimulus efforts in the banking and real estate sectors. Now they're also announcing steps to improve agriculture and food security. Ag Day's Michelle Rook joins us with an update. Michelle.
Clinton Beijing is sharply expanding its budget to stockpile ag goods and energy needs this year. The government is also increasing support and policies to boost grain and livestock production aimed at improving food security. Now, the hope is they will eventually look to the U.S. for part of their needs. The Chinese government announced it will spend $19.5 billion on stockpiling grains, edible oils, and other materials this year, up 8.1% from a year ago. Arlen Suderman with StoneX confirms they're building reserves, even though they had big crops, including corn, and their prices are depressed.
China has been buying corn for the reserves to prop up domestic prices to support their agriculture, which means imported corn continues to work into China as well. Say, why are they doing that? But they're building up reserves of basically all of their essential commodities, be it crude oil, be it corn, be it soybeans or whatever. They're building up those reserves. So that's fitting them right now with their objective, like they're preparing for something, I don't know.
There have been reports of possible Chinese sales, including corn out of the Pacific Northwest, but Suderman says most of the business is going elsewhere.
They're buying Ukraine and they're buying Brazilian. Occasionally they buy a little bit of corn from us, but mostly they're getting it from Ukraine and Brazil.
However, China did buy U.S. soft-red winter wheat late in 2023, and they recently bought U.S. sorghum.
Certainly an important market to us, and certainly as we get into a time of year where we're already putting sorghum in the ground in South Texas, exciting to see Chinese purchases continuing to come through and those shipments continuing to go.
However, Lust isn't sure how much more China will buy. And officials with the U.S. Soybean Export Council confirmed China's stockpiling, but they're still waiting for additional soybean purchases as well.
I've heard they've continued to liquidate some of their reserves and they need to buy some more for their reserve program. We had actually been hoping that that would happen in February. It didn't seem to, so we'll just have to watch it carefully.
Sutter says they may have to wait until after Brazil's harvest, but China likes to buy U.S. beans to stockpile because they store better than Brazil's.
That's been an important part of the U.S. demand going into China because they keep those reserve stocks and they really appreciate the quality of U.S. soybeans when they put them into reserve. So hopefully they'll be doing that again soon.
Meanwhile, China's allocated nearly $8 billion in subsidies for ag insurance premiums, up 19%, and has targeted grain output of 650 million metric tons this year. The finance ministry is also increasing the minimum purchase price of wheat and plans to stabilize meat and dairy production capacity. I'm Michelle Rook reporting for Ag Day.